I'd like to talk about the Chinese yuan today and Chinese interest rates and what the Elliott wave and the degrees are telling us about potential moves in Chinese interest rates. The first chart's a chart I show from time to time in the short-term Asia-Pacific update. And back in late 21-22, we saw some divergence where the Chinese bonds were increasing, but the dollar was not commensurably rallying. And then eventually that dollar rally did kick in a sharp five-wave move. And we see the relationship maintained with Chinese bonds. So now, with the dollar heading lower and the yuan strengthening again, Chinese bond prices are falling. Well, let's step back at the big picture because there's some implications here. The second chart is a monthly chart of the yuan per dollar relationship. And, we've been tracking this corrective rally in the dollar for a couple of years. And now that rally has peaked. But the important point here is we think this is a primary degree top in the dollar versus the yuan, this wave 2 high. And it's therefore, a much larger degree than other recent dollar tops. So now let's go back to that relationship with bonds and show a monthly chart of that relationship. And, we can see still that close correlation between bond prices, Chinese interest rates, and the exchange rate. But my point here is that this coming decline in the dollar and rally in the yuan is of much larger degree than the previous ones. And that should affect the government bond market as well. And I think we should see sharply lower bond prices in China in a longer term time frame, weeks and months.